Surged to 1.5% in July, its highest level in nearly a year, and that's up from 0.6% in June. Now, key drivers included higher costs in petroleum, chemical and rubber products, which rose 1.3%, and paper goods up 2.5%. Moreover, these sectors added a combined 0.5 percentage points to the overall figure. Meanwhile, month-on-month, producer prices climbed 0.7%, a notable rise from June's 0.2%. Business analyst Musa Beloy breaks down the numbers in more detail.
So let's talk about something called producer inflation. Now, that might sound a bit complicated, but it's really just about the prices that South African factories and producers charge to sell these goods. Which means if it costs more to produce it, it will definitely cost more for you and I to buy it. So now here's the big news that came out today. The latest producer inflation numbers showed a huge jump to 1.5%, up from 0.6% in June. So the producer prices basically more than doubled in just 1 month. And if you check, the South African rand actually weakened, trading at about 17 rand 72 cents to the US dollar, which makes imports cost more, especially fuel and machinery, and this basically adds to the inflationary pressure. Now, in most cases, when producer prices rise this quickly, it usually just means that factories are paying more for things like electricity, raw materials, and transport. And eventually, those extra costs get passed on to the consumer. So we could start seeing some higher prices in the shops, for stuff like food and household goods. Now, in short, while you and I may not feel the 1.5% producer inflation jump immediately, it's surely a red flag that could lead to higher living costs in the next coming months.